How share CFDs work. A share CFD is an undated contract that captures every aspect of share trading, except that you don't have to put up the full contract value. Share CFDs have no fixed expiry date, which gives you the freedom to close your position when you choose. You open and close your position at the actual market price, and while your position remains open, your account is debited or credited to reflect interest and dividend adjustments. Here are a few trading tips for trading share CFDs. Buy strong stocks in strong sectors in rising markets. Short weak stocks in weak sectors in declining markets, or not. Stay in cash in a trendless market. Buying the best stocks in the wrong sector in a down market is suicide. You also want to determine broad market and individual stock trends in the context of the business cycle, stock market cycle, and interest rate cycle. You should also stick to the stop loss discipline. If you are trading on margin, you cannot afford to relax on stop losses. Take smaller CFDs positions in speculative stocks. High-risk stocks should of course be treated differently. Speculative stocks add some spice to your overall portfolio, but smaller positions and wider stops will help you to manage your risk. As a general rule, I'd avoid buying too early, but I'm sure there are exceptions to this. I personally prefer to buy after 9 a.m. when the market has settled a bit from the typical large spreads in the first opening part of the trading session. You also need to remember that information is power. If you plan to buy and sell individual equities, it is in your best interest to keep yourself abreast of developments in the stocks you're invested in. Don't settle for just the hype about hot shares. A word for you if you trade small caps. Having dabbled in small caps, my general experience is that the worst thing you can do is to sell on the morning of a sell-off, as market makers will already have marked down the shares expecting sellers at any price. But as long as it's not Armageddon, often the prices begin to rise again, and the lower prices tempt buyers back in at much better deals. And finally, while stocks should make up part of your CFD portfolio, they shouldn't be all of it. Make sure you take into consideration your time horizon and tolerance risk to develop a good, well-balanced portfolio of shares, bonds, and cash. CFD trading tip. A very important principle to remember when trading is that which is easy to do is almost certainly the wrong thing to do. It is easy to take your profits when you have a big winner, and that's why it is wrong. 90% of traders take profit way too soon because it is the easy thing to do, and because of this, they never generate a handful of big winners they are required to pay for all of the small losing trades. 90% of traders lose money at the end of the year because they do things easy. If you want to be part of the 10% that makes money, then we have to do the hard thing. That is the true essence of being a contrarian trader. For more information, visit www.contracts-for-difference.com.